Hello, everybody. Welcome to Thursday. The S&P 500 was down 1% today. Really had a group of Federal Reserve representatives doing interviews today, all of which seem to be kind of weighing on the market as a whole, just talking about how committed they were going to be to raising rates and, really kind of making sure that inflation was stamped out. One gentleman actually went as far as to say that it felt like peak rates might be at 4.75%, which is higher than what we saw at the last Fed meeting where they were predicting peak rates at 4.6%. So these are things that are worrying the markets. So the Federal Reserve going to raise rates to the point where we have a big recession, creates big problems for the earnings in these companies, potentially even creates something breaking altogether, which is often what happens when they raise rates this way. They're looking back at the 1970s. They've talked about this before, where rates were, being raised to bring down inflation. Inflation started to come down, and then we saw, unemployment start to come up. And they respond to that because that's another mandate of the Federal Reserve, is to try to have full employment. They started to soften their rate stance and eventually lower rates. And then inflation got completely out of control by the late 70s, and they had to raise rates all the way to 19% on the Fed funds rate, which again, just in comparison, we're at 3.25 right now at the top of our Fed's funds rate. So this is something that they're thinking about. And of course, what their mandate is trying to bring down inflation and keep employment. It's not to keep the stock market going upward. So the stock market going upward is actually something that creates a problem for them to deal with, inflation. And that's why we're seeing all these interviews come out. We just had this big run up for 2 days. And then again, we're starting to see lots of, conversations come out from the Federal Reserve, trying, I think, to drive the market back down, have been fairly effectively, unfortunately. So tomorrow's job report is going to be really important because, again, if the Federal Reserve has a mandate to try to keep jobs up and jobs are continuing to grow, that allows them to get even more aggressive on bringing down inflation by raising rates even more than expected. So the expectation for jobs right now is about 250,000, 275,000 new jobs for September. Report comes out, 5:30 a.m. Western time tomorrow morning. And, if that report comes out at like 100,000, then there's some potential that the Fed could say, okay, good, that's, starting to drop quite a bit. Maybe we only do a 0.5% increase instead of 0.75% increase. But if it comes in at, expected numbers or even higher, maybe it's 300,000. Again, that's going to be a problem for the people that think the Fed's going to be pivoting to a more, accommodative stance, at least verbally, if not, physically, by moving the rates back down. And so this is going to be an important point to see what happens to the market. Again, the market has come off a couple days here in a row. We had a fantastic Monday, Tuesday. I think it was a lot of short covering. Wasn't enough to get interest in. We're still seeing individual investors selling this week and those types of things too. So be interesting to see what happens tomorrow. Very, very fascinating time frame to see how this plays out. But again, we have to wait and see how the Fed is going to handle this. Are we going to have a soft landing? Are we going to have a hard landing with a big recession that creates all kinds of problems for earnings? The stock market have to readjust itself for these new earnings as far as that goes. There is some potential here that the report comes out okay, market stays up, and then we start to get into earnings season where we start to get some surprises. The market is looking, I think, to a certain degree for some good news. And, earnings season can be that sometimes. Hasn't been true as much recently because we've had more write-downs of earnings and things like that. But it is possible that we see some of these companies do better than expected. And some of those expectations have been lowered, which does make it easier to, kind of beat those expectations. So anyway, we'll see what happens here. Looking forward to tomorrow. I do my show tomorrow, Talk Money with Tom. It's on YouTube from 12:15 to 1 o'clock on Pacific time. Come join us, watch. I do a summary of what I felt was happening with the market this week. I'll talk about the jobs report and kind of the impact of that. And then obviously we do a question and answer session after that. You can send in questions about asset planning, retirement planning, tax planning, those types of things. So look forward to seeing you then. Thank you very much.